Good afternoon, and thank you for joining ILG for an AB 1234 training. We're going to go ahead and get started. I see there's about 66 of you here. A couple of housekeeping items. You're going to be on mute during the entire webinar, but please type any questions you have. There's a questions box, and you can do a Q&A. We'll be taking track of those, and then we'll have several moments throughout the webinar where our panelists will go through them. And you have to have your own login to be present here. And to get credit, you must be present for the full 2-hour training. And you must answer all of our virtual polling questions. They don't have to be right answers, but you do have to answer them. We will have our certificates to you by the Friday, April 2nd, and we're going to email them directly to you with the email you signed up for this training with, and then you will sign them and turn them into your clerk. If you're an attorney looking for MCLE credit, please contact us. And my name is Kim Danko, and this is my contact information if you have any questions throughout the next month until you get your certificate. A little bit about ILG. We are the nonprofit training and education affiliate of the League of California Cities, CSAC, and the California Special Districts Association. And we provide practical and easy to use resources so local agencies can effectively implement policies on the ground. We have our main pillar areas, which are leadership and governance, civics education and workforce, public engagement, and sustainable and resilient communities. And we offer education and training like the one you're on now, technical assistance and capacity building to local governments, and convening. And now I'm going to turn it over. Our panelists are Nick Gorelli and Lindsay Thorson from Richards, Watson, and Gershon.
Hello, everyone. It's a pleasure to be with you. Like Kim said, my name is Nick Gorelli, and I'm here today with Lindsay Thorson, and we are going to be providing a 2-hour AB 1234 ethics training. And for those new to local government, I hope you find this informative. And for those veterans that have been doing AB 1234 trainings for a while, I hope that you find this is a good refresher course. Like I said, it'll be 2 hours. We're going to go through about two dozen or so laws. We don't expect you to remember every detail that comes out of this, but we do hope that you remember some principles and that give you the opportunity to issue spot and figure out when you might need to go to your city attorney or your supervisor for a little bit more guidance. I think Kim mentioned that we will take questions as we go along in the chat box, and Kim's going to let us know at appropriate times when we see those questions. So this is the typical reaction when many hear they've got to attend AB 1234 training. We feel like we don't need this training. We've heard it before. We already know the rules. This is our job. We practice this every day. And certainly we all have our own good moral compasses. But that's not the whole point. This training is about building or hopefully maintaining a culture of ethics within the city of Santa Clara and letting the public know that the city cares about ethics. Here's a relevant quote from President Lincoln. "Nearly all men can stand adversity, but if you want to test a man's character, give him power." And another quote from Elvis. "I don't like people who are in politics for themselves and not for others. You want that, you can go into show business." So there are always temptations involved with a lot of the issues we're going to discuss here. And that's why we always strive for the utmost appearance of propriety with what we're doing. Ethics in government dates back to the beginning of democracy. In ancient Athens, public officials took oaths that promised to not engage in any act of dishonesty and obey the city's laws. pledged to make the city greater, better, and more beautiful than it was when they took office, and reflected not only a commitment to not do bad acts, but also a promise to do good. So why is two lawyers teaching ethics? Well, we're here to teach you about the floor when it comes to ethics, but we always encourage you to think about the ceiling. This slide points out the relationship between ethics and the law. The law is the starting point for most ethical analyses. It's the floor. But just because something's illegal doesn't mean the public will see it as being right. Legal nuances are political losers. So when a public official makes a statement like, "What I did was technically legal under the law," it may not necessarily go over well in the court of public opinion. So we're always thinking about ways to go above and beyond what the ethical floor might be under the law.
Nick, can I interrupt you really quickly? We have people asking for the full screen view of your presentation.
Oh boy, is that not the full screen view?
I think you're in presenter mode. Let's see. One second.
What does it look like to you?
Well, now it's just the webcam showing, just you and Lindsay. So let's see.
Hmm.
Oh, let's see. Oh, and never mind. Maybe some people said it looked fine to them. So maybe it was just one person. Sorry, didn't mean to interrupt.
No, there is a gray outline, and that is unfortunately the full screen mode for the webinar. But as I just dropped in the chat box, the slides are available in the handout section of your control panel, and we will also be emailing them to all of you after this training. So hopefully, if they're a little bit small, you can open up that PDF and take a look at it that way. So. Okay.
Believe me, I want everybody here to see the slides and not necessarily my face. So getting back to it, why are we here? AB 1234 was enacted after a scandal that surfaced over 15 years ago. The Sacramento Bee had exposed misconduct by members of the Sacramento Suburban Water District. An employee there complained to the Sacramento Bee that the district had misused public resources. Turned out the district board members used the district credit card for personal expenses. Managers were issuing compensation for unused sick leave and vacation pay, and bonuses for district employees through accounts payable rather than payroll to conceal the payments from the IRS. There were also some shady reimbursement practices. You had employees reimbursing themselves on district credit cards for purchasing air conditioning equipment. Eventually, the district manager pled guilty to conspiring to commit income tax fraud and was fined $15,000, sentenced to 4 months in prison. He was 80 years old. The assistant general manager pled guilty to tax evasion and mail fraud and got 21 months in federal prison. So, born out of scandal is typically a legislative response from Sacramento, and we got AB 1234. Which was actually intended to just apply to water districts, but was later expanded to apply to all local government agencies. So AB 1234 actually requires us to talk about the principles of ethics. We've taken the following five principles of public sector ethics from the Josephson Institute of Ethics, and these are the principles for people in public service. So here's the first principle on this slide. Make decisions on the merits free from partiality, prejudice, or conflicts of interest. And you'll see this principle apply in the conflict of interest laws and anti-bribery laws that we will discuss later on. Our second principle is public office is a trust. Use it only to advance public interests, not personal gain. You see this idea implemented by conflict of interest laws and anti-bribery laws. These laws mandate that the public officials act in the public's interest, not to serve private interests. Third, reflecting the values of transparency and accountability, you should conduct government openly, efficiently, equitably, and honorably so that the public can make informed judgments and hold public officials accountable. You see this idea implemented in the Brown Act, disclosure requirements under your Form 700, and the Public Records Act. The fourth principle, reflecting the values of loyalty, respect, and fairness. So honor and respect democratic principles, observe the letter and the spirit of the law, and we see this in our due process requirements and public bidding laws we'll discuss at the very end of this presentation. Finally, almost all of the ethical values are reflected in this principle. Safeguard the public confidence in the integrity of government by avoiding appearances of impropriety and conduct unbefitting a public official. The key words here, again, are the appearance of impropriety. The public is concerned as much with avoiding the appearance of impropriety as it is with actual misconduct. So let's boil these principles of good government down to three things. Transparency is always easier. The process you go through is important when making decisions. And as you may have seen in the media, there is such thing as bad public publicity. Here's an example. One of my colleagues likes to say that any day he gives an AB 1234 training, he can probably go to the local section of the newspaper and find some sort of scandal that deals with government ethics. So why should we care? Because the press cares. I just showed you a press clipping. This is the type of stuff that typically gets picked up by the local newspaper. And the press cares because the public cares. The public wants to see their government officials do well and avoid the appearances of misconduct. When the press cares and the public cares, the legislature cares. As discussed, this whole requirement for ethics training came about because of a water district misusing public funds. But there's other reasons to care too. Violating the laws we're going to talk about today carry civil penalties and in some cases, criminal penalties like jail time. So Lindsay and I have broken up the AB 1234 presentation into 4 groups of ethics laws. The first one deals with personal financial gain and conflicts of interest. The second, personal advantages and perks. A lot of that is going to deal with gifts. The third, governmental transparency in the Brown Act and the Public Records Act. And finally, we'll talk about fair process laws like due process principles. I'm going to jump right into the first group, personal financial gain, and then Lindsay will pick up the second and third. So this group deals with a fundamental goal. How do we ensure that governmental decisions are made for the benefit of the public rather than the financial interests of the public officials who make them? Although we should aspire to that high ethical ceiling, at the same time, we need to have a minimum ethical floor established by law. And there are 2 primary California laws that seek to separate public officials' personal financial interests from their decisions they are making as public officials. First, the Political Reform Act. It has 2 components, your disclosure requirements under the Reform 700s and your local conflict of interest code, and the recusal or abstention requirements that we know through the conflict of interest laws and that have been refined by the FPPC. Second, there's Government Code Section 1090. That's a similar conflict of interest law that deals specifically with contracts. And then there are rules dealing with prospective employment, I think we'll discuss later. So the Political Reform Act. This slide shows the Watergate complex in Washington, D.C. In reaction to Watergate, many states enacted ethics and conflict of interest laws. In California, the voters in 1974 enacted the Political Reform Act. It's been amended many times since, but the core concepts have remained the same. And the PRA created the Fair Political Practices Commission, which is in charge of implementing the act and enforcing the act. And it is constantly updating and revising regulations that are intended to implement the act, and which we constantly have to keep abreast of. Under the Political Reform Act, recusal is required when you have a conflict of interest. And what does the conflict of interest rule say? No public official shall make, participate in making, or in any way attempt to use his official or her official position to influence a governmental decision in which he or she knows or has reason to know he or she has a financial interest. Note the phrase make, participate in, or influence. This is not limited to voting. It includes preliminary discussions and conversations about a governmental decision. You have to abstain entirely. So this law is aimed not just at actual misconduct, but at the perception of misconduct and temptation. Even if you make a decision contrary to the interests of your own financial interests, you can actually violate the Political Reform Act. And so the PRA and the FPPC have had to draw lines as to what is and is not a conflict of interest. And these lines are not always intuitive or obvious. You know, we're going to talk about the 500-foot rule for real property interests. 500 feet is really an arbitrary number, but that's what we've arrived at. And actions that seem right may still be illegal. And this is difficult for a lot of public officials to get their arms around, because everyone says, okay, I may be tempted, but I can do the right thing. I don't need a law to tell me I can't participate. I'm going to do my job and I'm a professional. But this just isn't how the law works. The law is keeping you out. It's forcing you to stay out of a situation where the public, regardless of your motives, might think you may be tempted to make a decision that affects your financial interests. And there are penalties for doing the wrong thing. And this starts out with the Form 700. How do we know what your financial interests are? Let's talk briefly about the Act's disclosure requirements. It's a timely topic, as our filing deadline for our Form 700s is going to come at the end of the month, April 1st. A Form 700 requires you to report your financial interests and to do so accurately. There can be penalties for late filing or the failure to file. And accurate reporting prevents conflicts and increases public confidence. It allows the public to hold public officials accountable because they know what financial interests you have. Failure to report a Form 700 will almost always make the FPPC, the public, and the press more suspicious. The Political Reform Act requires disclosure of economic interests on your Form 700. The statements must be filed when an official assumes office, once per year thereafter, and when you're leaving office. You need to disclose all of your economic interests, and you may also need to disclose certain of your spouse's economic interests too. And here's a brief list of those interests. We'll get into them a little more detail when we talk about the recusal requirements. For staff, unless you are a high level, like this official, like the city manager or the city attorney, you are most likely covered under the city's conflict of interest code. And that conflict of interest code is going to lay out who's required to submit a Form 700 and what you are required to disclose under the Form 700. For our elected officials and the planning commissioners and those high level officials, you're going to have to disclose everything, a full Form 700. There are also other types of disclosures to be aware of. As a candidate for an elective office, you report campaign contributions, and there are various FPPC reporting forms for that. That could be a whole another 2-hour seminar. As an elected office holder, you report behested contributions or contributions by a third party to, these are contributions by a third party to a nonprofit at your request, equaling or exceeding $5,000 in a calendar year. This applies when a single source contributes the $5,000, not multiple sources to the nonprofit. And there's a form on the FPPC website for making this disclosure. Okay, let's move into our recusal requirements under the FPPC rules. The FPPC has a basic test for analyzing conflicts of interest. Is it reasonably foreseeable that a governmental decision will have a material financial effect on any of your financial interests that is distinguishable from the public generally? We're going to break this down into its component parts. So let's start with the first bullet there. Is the public official participating in the making or using or attempting to use his or her official position to influence a governmental decision? What constitutes a governmental decision? Well, the easy stuff is when you vote on a motion, a resolution, or an ordinance. You have deliberations, you make appointments, you decide to enter into a contract, you decide not to take certain action. That's all part of a governmental decision, but it's much broader than that. What qualifies as participating in making a decision That could be when one acts within the authority of his or her office or position and advises or makes recommendations to the decision maker, or when you negotiate without significant substantive review with a third party regarding a decision, and then attempting to use an official position to influence the decision can occur when you contact or appear before or otherwise attempt to influence any member, officer, employer, consultant of your agency, or advocate on behalf of your agency to another agency. It really means you can't use your official position to lobby on behalf of a particular outcome. So what are your financial interests that could give rise to a conflict of interest under the Political Reform Act? Well, let's start with real property interests worth at least $2,000. In California, I think almost any property interest will meet that threshold. Note that if you lease property, however, on longer than a month-to-month basis, it's a financial interest. But if you just have a month-to-month lease, for example, on your apartment, that's actually not a real property interest under the Political Reform Act. Sources of income to you of $500 or more in the last 12 months. That could be your employer, for example, are financial interests attributable to you. Your investments worth $2,000 or more. We have to look at your business interests. Perhaps you sit on the board or have a second job at a family business. That's a financial interest to you. And then gifts of $520 from a single source over the last 12 months. Let's talk more about real property interests, because that seems to be the financial interest that we deal with most often in analyzing conflict of interest problems. So real property interests worth at least $2,000 are financial interests under the Political Reform Act. And it could be an interest owned by you and your spouse together, owned by your spouse separately, or your dependent child's property. But remember, your interest as a tenant in real property for a month-to-month lease only. Other tenancies are subject to it. The month-to-month tenancy is exempt. Sources of income of $500 or more in the last 12 months can include your own income from an employer. It doesn't include necessarily your income from your city job. Promised income, maybe your dependent child's income, your spouse's income, and then commission income, perhaps if you happen to do any real estate brokerage work. But there are special rules for that. Investments worth $2,000 or more. For example, if you own an investment in Apple stock, that's an economic interest that you have, that if you perhaps happen to be in purchasing and you're working on purchasing iPhones for the city, we have to think about whether that Apple investment, if it's worth $2,000 or more, prevents you from working on that contract for iPhones. Your business interests, maybe you have a management or employment position with another business. Sources of gifts are a financial interest to you. The donors of those gifts may give rise to an economic interest that we have to account for if the donor of the gift is implicated by a government decision. Lindsay's going to get into all the details about gifts, so there's much more of that coming up, but gifts are very broad. It's not just something with a bow on it. You also have an economic interest in your personal finances, including your personal expenses, assets, or liabilities. So one way to think about this is, will the decision you are making have the potential to increase or decrease your personal expenses, your income, your assets, your liabilities? Will result in a measurable gain or loss in your finances? So we've identified when the Political Reform Act applies to a particular decision. We've looked at what are your financial interests we have to take into account when you're making that decision. And now let's look at whether there is a material impact on those financial interests caused by making that particular decision. And we'll use a couple of materiality standards that the FPPC has come up with. Let's look at real property interests. So there are both direct decisions and indirect decisions that can affect your real property interests. It's a direct decision when your property is actually the subject of a general plan amendment or a zoning or rezoning or a permit decision. And there's an indirect decision if the decision could change the development potential, the character, or the use of the property, and the official's property is near the affected property. So both types, direct and indirect decisions are involving your property, implicate the Political Reform Act. Importantly, there's no longer a bright line rule for the materiality standard for decisions that affect ownership interest in real property. We used to just look at a 500-foot rule. Is your property within 500 feet of the boundary of the decision we're looking at? If so, you had to recuse yourself. If not, you probably could participate. Well, now there's a presumption that a decision involving property within 500 feet of an official's property will have a material impact on their interests. In addition, there's now a presumption that a decision involving property 1,000 feet or more from the official's property will not have a material impact on the official's interests. However, both of these presumptions can be rebutted with clear and convincing evidence. But sort of as a rule of thumb, if your property is within 500 feet of the boundary of a decision we're considering, you're probably going to have to recuse yourself. If it's more than 1,000 feet, you probably can participate. Then there's a gray area. For decisions involving property located between 500 and 1,000 feet from your property, whether the decision creates a conflict now depends on a number of factors. Under the FPPC's latest regulation, a decision will have a material impact on your property interests if it would change the parcel's development potential, income producing potential, highest and best use, market value, change the character, and we look at all those factors to determine whether a governmental decision is going to change your property's character. Will it have any of those environmental impacts? So let's take a look at an example here. The FPPC advised that the mayor may participate in decisions regarding a pedestrian path within 500 feet of her residence because it is unlikely that the small improvement will have a measurable impact on her residence. So that was a situation where, despite the fact that the property was within 500 feet of this trail, there really was no clear and convincing evidence that the trail was going to have an impact on the value of that property. On the other hand, the FPPC has advised that a council member could not participate in decisions regarding two residential development projects located within 2,500 feet and 1,300 feet of the official's residence. The project would develop 500 acres of vacant land, adding 450 new homes to the community, 450 additional vehicles traveling the same access road as the council member. So in that situation, despite the fact that the council member's property was more than 1,000 feet from the project boundary, there was still, the project was so big and so impactful that it was going to change the character of the property and have a measurable effect on its value. So in a lot of situations, getting an FPPC advice letter to make that decision to help you advise you on whether you can participate is always helpful. There are exceptions to the real property interest regulations. There's no financial effect if a decision solely concerns repairs, replacement, or maintenance of existing streets, water, sewer, storm drainage, or similar facilities. This is really to recognize that in a lot of instances, it's really almost a ministerial job to just keep your streets repaired, and that shouldn't preclude a public official from being able to vote yes or no on whether to do so. There's no material financial effect if the decision solely concerns general plan policy decisions, unless the decision is initiated by the public official. And when I say policy decisions, I'm talking about high-level policies, not whether a particular use is allowed on an official's property. And finally, common areas and common interest developments are now excluded from the definition of real property. This avoids the situation where we have to kind of count the 500 feet from a common area rather than the official's actual home. The public general exception applies when a significant segment of the public will be affected in the same manner as you For example, if a city is reconsidering its pedestrian master plan and each city council member owns property within 500 feet of proposed sidewalk improvements, well, that 500 feet rule is implicated, but because the plan encompasses a large portion of the city and maybe 38%, 40% of all real properties in the jurisdiction are within 500 feet of the proposed sidewalk improvements, that's the kind of situation where the public generally exception applies, so that all council members could participate in that situation. There's also an exception where somebody, for legally required participation, this is called the rule of necessity. And it happens when maybe there are not enough members to participate because of conflicts of interest among 3 out of 5 member council. And at that instance, there's a random selection process that's used so long as there is an explanation in the minutes as to why the exception must be used. So you might have to draw straws to figure out who can fill the quorum to participate in that decision. Let's talk briefly about the materiality standard for business interests. We talked about the materiality standards for real property interests. If your financial interest is directly involved in a decision, then there is a presumption of materiality. For example, if your financial interest is a business entity that is the subject of a governmental decision, such as your business entering into a contract with the city, or if it's a named party as part of that contract, then you're presumed to not be able to participate. Otherwise, the financial effect is material if the decision may result in an increase or decrease of certain numeric thresholds for assets, liabilities, gross revenues, or expenses. There is an exception, however, if the official's interest in the business entity is $25,000 or less, and the official owns less than 1%. Only a direct involvement is material in that case. Each category of financial interest has a separate test to determine the materiality of the effect of the decision. We've only highlighted real property and business entities in this presentation. But we always like to say, if you're going to start looking at materiality standards, it's a good time to talk to the city attorney and work through the issue. So there's a 4-step test that the FPPC applies for conflicts of interest. Will the governmental decision result in a reasonably foreseeable financial effect on one of your financial interests? If yes, is that effect material? If the effect is material, is the effect the same as effects on the public generally? Remember that section we talked about. If the effect is material and no exception applies, then you may not make, participate in making, or using your position to influence that decision. Keep in mind the test for conflict here is whether it's reasonably foreseeable that a decision will have a material financial effect on your interests. Reasonably foreseeable means realistic possibility. If there's no realistic possibility that a decision will impact your financial interests, then you don't have to recuse yourself. So again, if you get down to a materiality question, it is best to ask the city attorney or your supervisor for assistance, as this can start getting tricky. Importantly, if we go through that entire analysis and we determine that a decision is going to affect your personal financial interests, you are disqualified. Don't discuss the decision with or influence staff or your colleagues. Identify the nature of your conflict at the meeting if you're a council member or a planning commissioner. And leave the chambers after stating your abstention. Although if an item is on the consent calendar, you can remain so long as you abstain from that particular item. Note, you can't avoid disclosure by leaving the chambers. If you're in the council chambers, in order to properly recuse yourself under the Political Reform Act, you actually have to briefly explain the nature of the conflict. All right, let's get technical here and try out one of our quizzes. So, which scenario here has the least likelihood to cause a conflict of interest? So, all 4 of these could have some conflict of interest issue here, but which one is going to have the least likelihood to cause a conflict of interest? It's like an LSAT question. A, the city employee owns stock in the amount of $3,000 in Apple and is working on a contract for purchasing more iPhones and iPads for the city. B, city employee's sister works for a general contractor who is the lowest responsible bidder for a new public works project. C, A city employee works in the planning department and is reviewing a land use application filed by the employee's spouse. And D, a city employee's spouse is an employee of a consultant who provides services to the city. So which one of these four is least likely to present a conflict of interest problem under the Political Reform Act? And I'll give you a couple of seconds to
Hopefully you all just saw a polling question pop up on your screen. So please take a second here to respond just by clicking the answer that you think is the least likely to cause a conflict of interest.
Okay, we have about 80% who have voted. Okay, and it looks like we've got almost everyone. Go ahead and share those results.
Okay, it looks like A and B were the popular answers. And whoop, how do I get back to? There we go. We think B is probably the best answer, and that's a little bit of a trick question. It's probably because the employee's sister really isn't a member of the employee's immediate family. When we look to whose finances are attributable to you, it's your spouse or community spouse or dependent children. Your sister's income is not attributable to you. Also, we don't know if the employee works in a management position or in the public works department responsible for the project. However, even though this is not a technical conflict of interest, it has the appearance of impropriety, and the employee should still be cognizant of whether they should participate or not. But I want to talk about A, because I think that that is another one where ideally you would not be participating in that decision. It's probably not a legal conflict of interest because no amount of iPhones that the city of Santa Rosa purchases, unless it really is a lot, is going to change the relative value of Apple stock and have a financial interest in Apple. So that's probably not going to cause a technical conflict of interest. But again, that's another one that the appearance of impropriety is great, and you should still probably recuse yourself from that decision. And that would only be, to be clear, if you owned $3,000 directly in Apple stock. There's an exception for mutual funds that invest in a broad basket of stocks. If you, like me, have an investment in a mutual fund or your 401k, you don't have a financial interest in every single stock interest that that mutual fund invests in. Assuming you do have a financial interest and you have to recuse yourself, you are allowed in certain circumstances to actually go in to the audience, leave your seat at the dais, go sit in the audience, and present your personal interests to the city council or the planning commission. But it's only if you are representing your interests on behalf of your real property or a business that you own or control. There are significant penalties for violating the Political Reform Act. The most often penalty that you see are civil fines imposed by the FPPC, which can range from $5,000 to $10,000 per violation. Importantly for the city, a decision that's infected by a PRA violation can be invalidated by a court. It's a misdemeanor. You may be subject to paying your attorney's fees because the city likely won't be defending you. And it's certainly politically and personally embarrassing. Just want to point out that there are ways to seek advice from the FPPC. And if you see a project or decision coming down the line that you think that you may have a conflict of interest in, it's always, and it's a bit of a gray area, it's always helpful to seek an advice letter from the FEPC because if they determine that you don't have a conflict of interest, that formal advice letter can immunize you from liability. Okay, that's the Political Reform Act's Form 700 and recusal requirements. Let's briefly talk about Government Code Section 1090, which shares a lot of characteristics with the Political Reform Act, but it only applies to contracts. Although Government Code Section 1090 predated the Political Reform Act, it has nevertheless survived it and prohibits public officials from having a financial interest in government contracts. Specifically, a public official may not make a government contract in which he or she is financially interested in. And we'll define the terms making a contract and financially interested in a moment. But the first key point is that Section 1090 only applies to contracts, whether you enter into a contract, amend a contract, or extend a contract. It has three basic elements that must be satisfied in order to violate the law. First, you have to be a public officer or employee. We'll check the box there. Second, you or your spouse must have a financial interest in that contract that is coming before the public agency. Courts interpret financial interest very broadly as any situation where you or your employer may stand to gain or lose financially by the making of the contract. The financial interest can be a direct interest, such as when the contract actually involves you. And it may be an indirect interest, such as when a company that's contracting with the city you may work for on the side or have an investment in. Third, the government contract must be made either by you in your official capacity or by the city council of which you are a member. Making a contract interpreted very broadly here as well. A contract is not just made when the city council approves it, but it also involves all the preliminary steps leading up to the contract's formation, such as approving plans, specifications, and engaging in negotiations. So what does this add up to? If you're a council member, your city cannot enter into a government contract in which you have a direct or indirect financial interest. That's an important point, and I'll repeat it. If one member of the council has a conflict of interest under Government Code Section 1090, the entire council is precluded from entering into that contract. There's not a recusal component unless an exception applies, and I'll briefly discuss the exceptions later. If you're a commissioner or staff member, and only you have a financial interest, you can abstain and the city council can move forward and approve the contract. So that's an important distinction between city employees working on a contract and the city council approving the contract. So if you have or may have a financial interest in a contract, contact the city attorney immediately. It's important because you can't unring the bell with the contract. If we have a city employee who has a 1090 conflict, who's been negotiating a contract all along, there could be a problem if that contract is then put before the council for approval. But if we can identify that conflict early on, hopefully the city can identify somebody else to negotiate it. Like I said, in many cases, abstention doesn't help when we're talking about the council level. There are some exceptions that are complicated and very limited. As I said at the start, people think they are doing the ethical thing and their intentions are good, but they still run afoul of the law. This isn't Bernie Sanders. It's former state superintendent of public instruction, Bill Honig. He thought he was helping out a nonprofit that his wife worked for when he approved a grant, and therefore a grant agreement, to provide funding to that nonprofit that his wife worked for. And therefore, he had a financial interest in a contract that was going to financially benefit his wife and therefore him. And he was prosecuted for violating Section 1090. Want you to be aware of an evolving area of 1090 that involves something called follow-on contracts. Follow-on contracts typically arise where one consultant is retained to design a program or service, and then the same consultant is retained by separate contract to implement the program. The consultant has a financial interest in the making of that follow-on contract to actually implement the program because they essentially had a benefit in designing the program under that first contract. And so one way to avoid that problem is to include all phases of a project into a single scope of work within a single contract. So think about how these follow-on contract issues affect your contracting at the city, and do so early on so that you can avoid problems down the line. There are exceptions to Section 1090, as I said. First, if an official has only a remote interest in a government contract, then the city may enter into that contract as long as the official discloses the interest to the agency, board, or body, has the interest noted in the official record, and disqualifies him or herself from any vote, deliberation, or influence on the matter. So that is a limited recusal opportunity to allow the council to approve a contract despite the 1090 conflict, because there's something called a remote interest. Note, this exception is not available to any officer interested in a government contract who attempts to influence others. So you can't use this opportunity as a lobbying effort. The second category of exceptions are called non-interest exceptions, and they are treated as if there is no financial interest at all. If held by an official, no disqualification is required, but disclosure may be required. I just wanted to talk about a couple of examples of these remote interests and non-interests. Nonprofit entities can fall under either a remote interest or a non-interest exception to 1090, depending on your role in the nonprofit. So if you or your spouse or dependent child are an officer or an employee of a nonprofit, then you have a remote interest. As we discussed, staff with remote interests must recuse themselves from the process and have nothing to do with the contract. If you, your spouse, or dependent child are a non-salaried member of a nonprofit, such as a member of a nonprofit organization like the Y. I am a member of the Y and I have a gym membership, but the legislature has determined that gym membership in the Y is not a financial interest under Section 1090. It's a non-interest and you can participate. Also, the legislature has determined that if you are a non-compensated officer of a nonprofit that carries out a purpose that's furthering the city's mission and supports the city's function, and the city has an obligation to support that entity, then you may also have a non-interest, but you might have to disclose what that interest is. Okay, our second quiz. Which of the following, again, is least likely to result in a Section 1090 conflict? A, a city employee or their spouse owns stock in a supplier of goods or services to the city, and the employee is involved in procurement of those goods or services. B, a city employee spouse is a consultant who provides city services to the city and is compensated by the city. C, a city employee spouse works for a consultant that is seeking to become the city's contract land use consultant, and the employee works in the planning department with decision-making authority over the contract. And D, city employee serves as a non-compensated officer of a nonprofit that receives city support. So again, we're looking for the option that is least likely to result in a Section 1090 conflict if we're dealing with a contract involving one of these scenarios. And it looks like the poll is up for you.
And we'll give it just a few more seconds. We have about 75% who have voted.
Okay, great. It looks like the majority of you picked D, and that is the right answer. The employee serves as a non-compensated officer of a nonprofit that receives city support. And I basically had given you the answer right before we got there. That is probably a non-interest exception to 1090. And although disclosure may be required, you would be allowed to participate in that decision. It's important to follow Government Code Section 1090 and get it right. Contracts that are infected by a 1090 violation are voidable, or void, not just voidable. In other words, they're unenforceable contracts. You may have to refund money, and there are criminal and civil violations. Defenses that don't work. The contract's fair, just, and equitable to everybody. So don't just think everybody got a fair arm's length deal. If there's a 1090 conflict, the contract's void. One thing to remember of is that the city attorney's advice on 1090 violations do not immunize you for violations. However, in the last 10 years, the FPPC has been given the authority to issue opinions, formal advice letters to public officials on whether they do or do not have a 1090 violation. And those formal advice letters can immunize you from liability. And like I said, if you're on the council and you have a 1090 violation that doesn't fall within a remote or non-interest exception, abstention may not cure the 1090 violation. Okay, I'm going to turn this over to Lindsay for Group 2, Gifts, Perks, and Misuse of Public Funds.
Hello, everybody. So the section I'm going to be talking about, as Nick mentioned, is gifts, perks, misuse of public funds. And I know gifts are usually an exciting thing to talk about, something everyone looks forward to. So I hope I don't ruin that for you too much today. So first, the main concept is not to use your office for personal gain. Be mindful of perks given to you because of your office or your role. And lastly, keep in mind that perks can create the appearance of bias. And I think that's a trend that you're going to see, not only along what Nick was talking about, what I'm talking about, and what we will later on, but generally, anytime you think, is this right? Could there be an issue? That's usually a good flag that there might be an issue. So it's better to kind of flesh that out up front, figure out if there is an issue, than kind of ignore that voice in the back of your head and then find out later that there was maybe something we should have considered. And then also, it's advisable that you do not accept gifts or perks that are provided to you because you're a public employee. So you want to look at, why are you receiving that gift, and is it because you were an employee? One of the obvious ones we have here, don't take bribes. That's when you think, I don't even need to know that. Clearly, you wouldn't do that. But sometimes they're not as obvious as they may seem, or they may be in a form you don't realize. And we also want to make sure that you understand what the repercussions are if you do. So, everybody, state, federal, nobody wants you to be accepting bribes. And next, we have here an article, as Nick was saying earlier. It's usually not that difficult to find something. And here we have the headline of a former Temple City mayor sitting back in a courthouse after she was convicted of taking bribes and committing perjury. She was in her 70s, convicted in 2011 of taking $10,000 in bribes from a developer and then lying about it, and was sentenced to 4 years in prison. And next, we have a story about a former mayor in Upland who was convicted of taking $5,000 in bribes from a local businessman in exchange for approving a permit for the operation of that person's business. He went to prison, got out, and then wrote a book about it titled From Country Club to Federal Prison. So in that book, he talked about the effect it had on his life, and he wrote the following about it. You can't go through the public embarrassment, the ridicule, the shame, having to resign from something that you loved, getting divorced from the woman you love, filing bankruptcy, and on top of that, losing your home, which you had 24 years of memories in, and not be a different person. And another one to take a look at, here we have Santa Fe Springs Council member, Joseph Serrano, and here the city was working on an ordinance to regulate medical marijuana dispensaries. And he was convicted of asking and getting a bribe from a dispensary in exchange for trying to help craft the ordinances that were going to allow that dispensary to stay open. And he ended up taking about $11,500 in bribes. What he didn't know, which I'm sure he wished he had known, was that the owner of that dispensary had gone to the FBI and was actually acting as an informant for them. So he ended up in federal prison for 2 years. So next, let's talk about what is a gift. Because I think, even though we sort of went through those examples of bribes, hopefully none of you are going to end up being involved in that. What can be a bit more complicated and can lead to inadvertent issues can be gifts. So what is a gift? A gift is anything of value for which the recipient did not provide payment or services of equal or greater value to the donor. And that's the definition that the Political Reform Act gives to us. And, gifts don't always have to have bows. They can come in many different forms. So some of these can be meals, food, drinks, including receptions. So once we are back in the world where we can have conferences and you are attending them and different vendors have receptions, those are something to keep in mind. It can include entertainment, and that includes concerts, sporting events, any tickets like that, raffles potentially, travel and lodging, if those are given to you for free, tickets in general, holiday gifts potentially, and any rebates or discounts that you're receiving that are not open generally to the public. So if you do receive a gift, what you're going to want to do is determine whether that's something that you have to report or something that you don't want to or that you can't accept. So as a Form 700 filer, you have to comply with the FPPC's gift rules. And you must report on your form any gift received from a single person or source valued at $50 or more in a calendar year. And this is considered in the aggregate. So that means that if you get a gift of $40 in January, you go out to dinner, you have another gift in March, that's about $75, you're going to need to report that full 115. It's not on a per gift basis, it's all the gifts you receive in that year. And there's also a gift limit that prohibits public officials from accepting gifts from a single person or source when that gift is worth more than $520. So you'll recognize that amount from Nick's earlier discussion. And again, this is an aggregate amount for the year. So gift rules apply to all of the following that are listed below: elected officials, the CEO, candidates for those office, anyone else that's listed in the local conflict of interest code, and consultants, which is a good one to remember and is not always an obvious one. One exception is relationships, and that can include a few different types of relationships. The first one is an existing personal or business relationship. So this is a long-standing relationship you may have that has absolutely nothing to do with you being a public official. So there's an exception if you receive a gift from this person that you've had that long-standing relationship with, and there's no evidence that gift was given in anticipation of any business that was related to that particular person. The next relationship is long-standing relationships with your friends. So if you have a childhood friend that you've known, for many, many years, and that friend decides to take you on a trip to Hawaii that has nothing to do with your public office, you are free to go on that trip with your friend, and that would not be something that's subject to the gift rules. And that also means you have a very nice friend. Last relationship exception is a bona fide dating relationship. So the FPPC recognized that even public officials date and have relationships, and you may get showered with gifts from your significant other. And if you're in that relationship or dating, that the benefits you receive from that relationship, whether it's food, dinners, gifts, are not required to be reported under the gift rules. Another exception is gifts from your families. you can see here that this applies to spouses, minor children, parents, siblings, grandparents, grandchildren, nieces and nephews, aunts and uncles, first cousins, spouses to any of these people. So, it's interesting to think here, the gift exception is fairly broad as to who can provide you a gift that you don't have to subject to the gift rules. One interesting point here is that the gift exception for families also applies to ex-spouses and ex-in-laws. And that just recognizes the fact that, the definition of family can be different for different people, and it's recognized that you might have a relationship where it would make sense for that to still fit in within the gift exception. So next we have holiday exception to gift rules. So gifts exchanged between Form 700 filers, another individual other than a lobbyist on holidays, birthdays, or other similar occasions, and gifts exchanged that are not substantially disproportionate in value. So if, for example, you have the Secret Santa gift exchange going on in the office, and you get a $20 gift card, and you had given a $20-ish candle as your gift, that's fine. You do not need to report that. So next, gift exceptions are to and from the city. So here, if specific criteria are met, payments that would otherwise be a gift to a public official could be considered a gift to the public official's agency instead. So here, Form 801 is used to report payments received by a state or local government agency that are used for agency purposes paid for by a third party. And there's a procedure that's set out for these agencies as to how they disclose these payments and how those are used. So if a payment meets these requirements, then the agency is the one who reports it, and the individual is not the person who has to report it. So the FBPC regulation 18944.1 sets out the circumstances where an agency's distribution of tickets to an entertainment event or a sporting event and the similar would not result in a gift to individuals that you would have to report as the individual. So this covers gifts or donations made to an agency where the agency then provides the tickets to agency officials for admission to either entertainment or sporting event type activity. So here, the agency has to have a policy that spells out how those tickets are distributed, and also has to make sure that there's a prohibition against those tickets being given out to others, sold, unless it's going to the immediate family or one guest of the public official. And the policy must prohibit the disproportionate use of tickets or passes by a member of a board or a council. They can't be earmarked by an outside source for use by a specific public official. So if you have an agency that receives a block of tickets to a sporting event, then you could pass those out to the employees. They could attend and they would not have to report that. However, if somebody came and said, I have this one ticket, I want this particular staff member or this particular council member to receive it, that would be a problem. With regard to raffles, an item received by an employee during an agency raffle is not a gift to the employee if the item received by the agency from the agency employee is not acting as an intermediary for another donor. So for example, similar to the tickets, you couldn't have somebody donate a gift to a raffle and have that go to a specific employee. If the agency bought the gift, has the raffle, that's one thing. But if the item is donated by a source other than the agency, not purchased with agency funds, then the item is a gift from the source of whoever provided it, and the agency is considered the intermediary for that gift. So for reporting purposes, the value of the gift is the fair market value, less any consideration that that public official paid to be, to participate in that raffle. And then lastly, talking about group gifts, say your agency receives a box of chocolates as a holiday gift from a local business, and the gift is addressed to the agency as a whole, not to any specific employee. In that instance, the employee does not have to report that gift if the value of each individual chocolate you received is less than $50. So hopefully that's going to be the case. Otherwise, that would be quite a box of chocolate if each of those was worth more than 50. If you receive a gift valued at $50 or more from a group of people, then you do have to report that gift. So here are some other exceptions to the gift rule. And we're going to discuss just one of these because this might be the one that comes up most often. So that's the home hospitality rule. So if you're invited over to a friend's home, you have dinner, you share a $200 bottle of wine, that is not a gift. It's considered home hospitality and is an exception. However, if the cost of that hospitality is paid by someone else, some third party, or the host is writing that dinner off on their taxes, then that meal does become a gift to you that you have to report. So the question you might be thinking right now is, well, how am I supposed to know if somebody else paid for that meal, or how am I supposed to know if my friend or my business associate is going to be writing that off on their taxes? And essentially, what's been said is if it's clear that that's what's happening, then you have to report it. If you have no reason to believe that that's the case, you don't have to investigate to determine. But if you're having dinner somewhere and they say, oh, this is great, because of my tax guy said that I can write this dinner off on my taxes because it's a business event or it's something else, then you're on notice and you would have to report that as a gift. So here's another watch out for gifts that can be in disguise. So specific rules apply to gifts given to your family that benefit you, when there's events honoring you and your performance of official or ceremonial duties. So anytime you have something like that come up, then we suggest discussing that with your legal counsel just to make sure that there's no concern and you know what to do if and when you receive any payments under those types of situations. And then the next question, what do you do if you do receive a gift that you don't necessarily want? So a gift is not deemed accepted or received if within 30 days after you receive it, the item is not used and it's returned to the donor is reimbursed for the item, or the gift is donated to a charitable organization or state, local, federal government agency without claiming a tax deduction. So you're going to have to act in a way that that gift becomes a neutral to you, either returning it, paying for it so that you didn't receive any benefit from that gift. So in summary, disclose and refuse. Those are the two words to remember from this section. In terms of disclosure, you should track the value of the gifts you received throughout the year. And remember that you're tracking each gift's fair market value. You should refuse a gift or gifts valued at $520 or more. And you should also disqualify yourself from any decisions that are affecting sources of gifts exceeding that $520 amount, even if the source is not one that's listed in your disclosure category. And again, if you are hearing all of the things we're talking about, wondering how you're ever going to remember how to keep them all straight in your head, the easiest thing is to refuse a gift, or if you've already accepted it, return or donate it so that it does not become a potential liability for you. So now we have a quiz relating to gifts, and here's our scenario. Meeting of city staff and a city consultant is set up and occurs remotely on Zoom. The meeting runs into the lunch hour. The consultant offers to have its staff call and have lunch brought over to the employee's house by Grubhub delivery as part of the meeting. And the per person cost of the lunch, including delivery costs, is about $18 per person. Is that a gift? Yes or no?
I'm just waiting for a few more responses.
Okay. So the answer here is yes, that is a gift. And oh, the free lunch is a gift. So the next question, is that reportable? And so you're going to want to go back, and if you remember, what is the minimum amount for having to report a gift? And so if you think back as to what that amount is, then yes, the lunch is a gift, but no, the lunch is not reportable. At this time, saying this is the only lunch that you've had with this person. But remember, you have to look at these in the aggregate. So if this is one of many lunches or a lunch plus a gift plus other things with this consultant, then potentially it could become something that you have to report. So, this is a good tip that even though something might not be reportable at the time, once you look back over the year with the number of gifts that you might receive, it is something you should always be keeping track of. So keep track of those gifts, even if they're not to the reportable level when you first receive them. Okay, so next we're going to talk about honoraria. And so this is a payment made in consideration for a number of things, such as giving a speech, publishing an article, attending a conference. And there is a prohibition on receiving honorarium. So you may not receive compensation for those things. So if you were asked to speak at an event as a Form 700 filer, you cannot accept this. There are some exceptions. So if you have a business that is to give speeches or write articles, so say you are a city council member, but your profession outside of that is that you are a reporter, or you are someone who provides motivational speeches, whatever something might be, that's your actual business, that's not related to your role as a public official, you are permitted to receive honoraria in that circumstance. And also you're able to accept free admission, lodging in exchange for giving a speech. But if you have any questions about these exceptions, then we would suggest you speak with your legal counsel, because anytime there's an exception, at some point there becomes a line where you might cross out of that exception, or there may be issues of appearance in some cases that you just want to talk through with your legal counsel and internally to make sure that that's not going to be the case. So next we're going to talk about loans. And there's a rule applicable to public officials who are Form 700 filers that prohibits the receipt of a personal loan of more than $250 from any officer, employee, member, or consultant of that local government agency in which the public official holds office, or over which the public official's agency has direction and control. So that's an important thing to remember as well. This rule also requires that loans of $500 or more from anyone else must be in writing. And be mindful that an unpaid loan can become a gift. So there are some exceptions to the loan requirement. You don't have to worry about mortgages, credit cards, bank loans, loans from family members. Those are all considered proper loans that don't have to be reported. Now, this is sort of an interesting rule here, and that is no free or discounted transportation. So this is a very old rule in California that comes from the Constitution and states that anyone holding an office in the state, whether elected or appointed or as an employee, cannot accept free or discounted travel from transportation companies. So this stems from the railroad days in California when legislative officials would receive free train rides up to Sacramento, because the train was the only way to get there. And so you might have an agency that had some business, and if you offer the free train rides to your officials, that might sway them in your direction. So that is still in case today. Again, this only applies to public officers, and there is an exclusion for frequent flyer mileage and discounts given unrelated to your position as an official. It's also worth noting that this does not apply to you free or discounted travel on publicly owned transportation services, such as MTA. So now let's talk about not using your public resources for political or personal purposes. These are important rules for both elected and appointed officials and staff to know. You simply can't use agency staff for personal use. So for example, you can't have agency staff care for your children, drop off your dry cleaning, run personal errands for you, and you can't use public resources for your personal purposes either. Well, one of the areas where this can come up is the mass mailing rule, and you can't use public funds for mass mailings. So agency staff can't send a mass mailing of 200 pieces or more at the public's expense if it features an elected official of the agency. So the theory here and why this isn't allowed is that every time this occurs, the elected official is essentially campaigning and touting all the great things that they might do, and this is coming at the public's expense. So one interesting point is that for purposes of this prohibition, for now at least, websites are not considered mass mailings because they're not tangible things and don't fall within the definition of mass mailings under the law. You also cannot use staff use or city resources or staff for campaign use. And here you want to remember not using agency funds. Agency property is one because you might not always think of that as using a city resource, but it would be considered that, or other resources for campaign activities or campaign purposes, even if you reimburse the city. Additionally, not using any agency equipment or office space or using the staff's assistance. So you really want to draw a pretty bright line between any campaign activity and any city resources at all. Also want to talk a little bit on the prohibition of gifts of public funds. So the city cannot give away its public funds or anything of value for free. As a public official, you are someone who has been entrusted with the public to be kind of the steward of our resources and to make sure that they're being used in the best manner possible. So we cannot be giving away the public's funds. There's also a prohibition on, you can't give away anything, but if you look at it and there's consideration for what was provided. So if that's through a contract, if we paid somebody to perform something and vice versa, we're allowed to contract for that. Or if there's something where the grant or donation is going to provide a benefit or something that is for the public purpose. So there may be situations where we might give money or we might provide equipment or space or something to a third party, but that's going to be allowable because we've determined that there is a public benefit and public purpose to what we're doing, even if we're not necessarily receiving something tangible in return. And so one other thing to talk about and to be concerned with is to avoid the misuse of public funds. We generally advise that our clients adopt a reimbursement policy, that expense forms are used and require documentation of expenses. Generally avoid using public agency credit cards when possible, and do not use your public agency credit card if you do use it for any sort of personal charges. So the key here is just to make sure that everything is documented. And there are penalties for the misuse of public funds. They can include if you pay for something out of your own pocket and then it turns out that's an illegal expense, you may not get reimbursed. If you approve an expenditure that's illegal or make one yourself, you may be required to pay retention or restitution to the agency. So for example, there were employees at LA Unified School District, and they used school district money to make a video for passing a school bond on their own. That was not a legal use of those funds, and those employees had to pay back the $100,000 out of their own pockets to the district for using the district funds. You may also be liable for attorney's fees if that ends up being the case. And penalties can also include up to 4 years in jail and permanent disqualification for serving in public office. So there can be some quite steep penalties there. Okay, so now we're going to move on to government transparency. And I see we're coming up on just half an hour left, and we have a bit to keep going through. So I'm going to talk a little bit quicker, I think, and just bear with us so we can get through all of this. So first, I want to talk about the Public Records Act. So this affords any person with the right to inspect and provide a copy of any identifiable public record. And here, the thing to note is that person is interpreted very broadly. It includes individuals, corporations, elected members of local agencies, and the person doesn't have to be a resident of California. And in fact, it's important to note, the person doesn't even have to identify who they're from or who they represent. So this is a very broad definition to keep in mind there. Next, the question, what is a public record? And really it ends up being any writing that has information related to the conduct of the public's business, and that's prepared, owned, used, retained by a state or local agency. And that means regardless of the physical form of that type of record. So that can be, it can be film, it can be, any number of types of media, it can be electronic, it can be hard copy. That's important to keep in mind. Okay. And here just is a list that kind of spells out more what types of things can be considered writing. And note that we have there in red, because this is very important to remember, that can also include emails, text messages, tweets, and it also add if you have, any sort of electronic conversation going on or documentation. Okay. One thing as an employee or official of a public agency you want to keep in mind is to avoid combining your public and your private. So don't add on anything to an email about your public agency's business. So if you send an email regarding a contract that you're working on for the board agenda or a council agenda, and then don't say something like, but I'm not going to be able to attend because I have a doctor's appointment regarding XYZ, and then include that in your email where you're going back and forth on city business. If you do that, it's possible that when we're reviewing, if that comes up as something that a Public Records Act request is looking for, that we might be able to redact that or remove it because we can say it's not really related to the city's business. But that might not always be the case depending on the context. And then also it adds extra work both for your colleagues that are reviewing those documents and your legal counsel to make sure that we're removing anything that might be unnecessary in there. Email threads as well. One good tip is to avoid combining topics within your email threads. That way, if you're having a new topic you're going to discuss with somebody, begin a new email. And if there is a Public Records Act request, then for that particular topic, you won't also be adding in a bunch of unrelated emails that will have to be gone through and potentially redacted. So going back to one of the key questions, what is a public record? So a public record does not include every piece of paper in the city's office. So but it can include a broad range of documents, such as photos, videos, tapes, recording, films, any of those sorts of things. But what you do want to remember is that, if you get a request for records, you do not have to provide every piece of paper that you have. So if you've brought to work your personal shopping list for the week, you're going to go to the market after work, you don't have to turn that in as a public record. But at the same time, as we were talking about, if you are exchanging emails back and forth on a public topic or a topic related to the city, and then you interject your personal kind of thoughts or background into that, you do run the risk in those cases of having that pulled into a response to a Public Records Act request. Now, there are a number of statutory exemptions to PRA requests. So one of them are preliminary drafts, notes, memoranda exchanged between staff, not normally retained by the agency in the ordinary course of business. Those are exempt, provided that the public interest in non-disclosure clearly outweighs the public interest in disclosure. So we have to apply this carefully, because this is going to be one where we have to weigh the issues, and it can be a tough thing to do. So, for example, if we had internal drafts of a contract exchange between staff, this exemption could apply if the agency normally discards drafts, and could apply to the notes the staff made regarding the negotiations, again, if that's something that's not normally retained. However, if you have a practice of retaining all of the drafts, retaining all of the notes, keeping those in a file, this exception might not be one that's going to apply. And you also have to remember in each of those cases that there's a balancing test to determine whether this is going to be applicable or not. And you'll see there's also a number of other exceptions there to consider. And then there is one catch-all exemption, which really goes back to that balancing test. So on the facts of a particular case, is the public interest served by not making that record public? Does that clearly outweigh the public interest served by disclosure of the record? And this is when you don't want to always feel like you can go back and rely on this exemption. You really do have to be able to show that the public interest is served by withholding that record. And one example that I've had where I felt this was a good catch-all to rely on is we had an entity where a Public Records Act request was submitted for the location of all of the security cameras on the campuses of all of the schools in a school district, and a list of all of the locks in the school and where they were. And so, technically there's no exemption for that information within the PRA. It's written down somewhere, and it's a public, public information. However, we felt that the public interest in withholding that for a safety reason was going to outweigh any public interest in having that knowledge. And so, that was a decision, made to withhold that document for those reasons. So that's the sort of analysis you're going to want to go through if you're facing that question. And there's also a situation that might happen where you might have inadvertently disclosed something that would be exempt at some point. And, fortunately, if that happens one time and we realize something shouldn't have been disclosed, that doesn't prevent us from in the future, if that same document or information is requested, from saying, no, we're not going to disclose it. So an inadvertent disclosure does not waive an exemption if it otherwise would apply. Okay, so we're going to move on to the Brown Act now. So this is a set of laws pertaining to governmental transparency. The central focus of the Brown Act is to ensure that local government meetings are open and that they're public. And it states all meetings of the legislative body of a local agency shall be open and public, and all persons shall be permitted to attend any meeting of that legislative body of a local agency. So this is what's called a sunshine law, essentially making sure the public is able to see how, as a public entity, we are conducting business. So the topics here to look at is to whom does the act apply? what is a meeting, what rules apply to those meetings, and then what are the remedies for a violation of the act. And so the act applies to legislative bodies. So the next question may be, well, what is a legislative body? So it's the governing body of the local agency. It's any subordinate boards and commissions that are created by the formal action of that governing body, and standing committees that have a regular meeting schedule and continuing subject matter jurisdiction. So for example, everyone might think, well, city council is certainly a legislative body, but your planning commission and other commissions like that are also going to be legislative bodies subject to the Brown Act. So what is not a legislative body? That's going to include advisory committees if you have only maybe 1 or 2 members of that body that are less than a quorum of the legislative body. And then now that we've established who the body is that we're talking about, let's look at what is a meeting. And so a meeting is going to be a congregation of the majority of the body at the same time and location, including teleconference locations, to hear, discuss, deliberate, or take action on any item that's within the subject matter jurisdiction. And 2 quick things to note here. While it says same time and location, you'll see in some of our later conversations that has a pretty broad interpretation. And then also another thing to note is it says to hear, discuss, deliberate, or take action on an item. Sometimes I'll get the question, well, don't you have to have done something for it to be a meeting? Didn't you have to take a vote or have some sort of action? And the answer to that is no. Even if you're gathering just to hear or discuss, that's still going to be considered a meeting for this definition. So one way that a meeting can occur where technically you might all be in the same place is what's called a serial meeting, and serial meetings are illegal. A serial meeting happens when there's a series of direct or indirect communications by a majority of the body to discuss, deliberate, take action on any item of business within their jurisdiction. So you do not have to all be in one place. It can be one member talking to another, who talks to another, and so on. So it's very important. But one thing to note is that we don't want you to walk away from this feeling that you are not able to ask questions to staff if you are a council member or a commission member. Staff briefings are permissible as long as they are unidirectional or they go in one direction. And so what that means is that you want to have a staff member provide you with information. You might ask questions for clarification, but what you do not want to do is then with that staff member get into a lengthy discussion about your opinions, or then ask, if you've met with the other staff members, if you've met with other council members, what do they think? So that essentially you're creating a consensus, or you're technically creating a meeting by those informational discussions. The 2 types of illegal serial meetings to look out for are one that we would call a hub and spoke type of meeting, and the other one that we would call a chain type meeting. And so the first one to look at, the next slide, we have the hub and spoke type of meeting. And so here's where you would have a single person that's in the center of the communications. So for example, on this slide, you might have the city manager who talks to the mayor about a project. The mayor says, oh, that project's going to be an eyesore, I don't like it. Then the city manager talks to a council member who says, oh yeah, that is definitely a terrible project. Then the city manager talks to another council member who asks what they're going to do about that awful project. And then the city manager says to that council member, oh, don't worry, I've already talked with the mayor, another council member, none of them like it either. So now you've created a serial meeting because you've essentially discussed an issue and are providing information about the viewpoints of other members of the council on an issue that's within their jurisdiction. And then the other type of of meeting is considered a chain meeting. And in that case, you might have member A talks to council member B, who then talks to council member C, and all along the way, they're sharing their viewpoint so that eventually you have a majority of your council who have all participated in the same type of conversation and may have shared their viewpoints and come to a consensus together. Unintentional serial meetings are a lot of these types of meetings that occur in our digital age, and that can come from group emails, group texts, comment sections in a blog or online news article, social media, which can be Twitter, Instagram, Facebook. All of those different types of communications can create a concern. So here are a few tips for your electronic communication. One, do not communicate your position on a pending matter to a majority of the members. Don't solicit responses from other members if you're forwarding information to all of them. And then also do not hit reply all when responding to an email. So there may be a staff communication that goes out to all of the city council. And if you reply all, then you're sharing your opinion with everybody on that email. And it's the equivalent of if you were having that conversation in person with everybody present. So you want to avoid that. One of our tips that we suggest is that if you are sending out a communication to all of a legislative body, that you do that in a way that you BCC all of the recipients so that anyone who receives it doesn't have a list of all of the other people on that email. So even if they accidentally were to, they couldn't reply all and create potentially accidentally a Brown Act violation. And so here are some other tips that kind of just go into that in a little more detail about not responding directly. And note that there's a new law that's in place just recently, starting at the beginning of this year, that is important to consider because it's different than what we were just talking about. So up until now, we were talking about meetings being a situation where you have a majority of the members talking to each other, and that was sort of your bright line if there's an issue. So what this new law does is say, do not respond to any communication on an internet-based social media platform regarding a matter within your subject matter jurisdiction that's posted by another member of the legislative body. And this applies to 2 or more members. So here the majority is not required in order for there to be a Brown Act violation. And because this is so different from how we usually look at Brown Act issues, this is one really to, on your notes, highlight this one. It's 2 or more members. So it's very easy to violate. So it's definitely something to keep at the top of your mind if you are participating in online discussions. And one other thing to note about these types of interactions, this also includes, so you can be considered communicating with another member if you are responding to their post by using a like button or by using digital icons or emojis, as are probably more commonly referred to. So if you put a happy face under one of your colleagues' Facebook posts, that can be considered your communication with them and could be a violation of the Brown Act. So what is okay on your social media platforms, you are able to answer questions, provide information to the public, or solicit information from the public regarding anything that's within your subject matter jurisdiction. You can also post about other things, but for purposes of Brown Act issues, you are able to do these types of posts, and that is not going to be a violation. Just remember that you cannot have your colleagues answer your questions or your posts or vice versa. So there are some exceptions as to when there is a meeting, and these can sometimes be confusing, and you may feel like you don't want to attend something because it could be considered a meeting or it's a little bit questionable. So these can kind of give you some guidance as to when a meeting is not a meeting. One of them is individual contacts. So if you meet up with one of your other council members, that is fine. You just want to be sure you're not going to accidentally create a serial meeting in that effect if that council member is then going to go on to talk with someone else. Conferences and seminars. So you are able to attend conferences and seminars, and that's not considered a meeting, as long as the topic is something of general interest or interest to local agencies. So for example, when you go to the League of Cities conference, that's acceptable and that's fine. What you do want to make sure is that while you're there and interacting with your colleagues, that you are not gathering at those events and having conversations about things within your subject matter jurisdiction, because you could then inadvertently create a meeting. You're able to attend community meetings, and that is fine as long as the public is able to attend. What you are not able to do, for example, if there was an HOA meeting somewhere and attendance was limited only to residents of that particular development, you would not be able to all attend that as a group. And a majority of the members can't discuss among themselves, any item of business that would be within their subject matter at any of these types of meetings or conferences. You also are able to attend another public agency's events. So if we're with the city and the school district or the county is having a meeting, you're able to attend those. If there's a social or ceremonial event, say there's a groundbreaking for a new business or building within the city, you're able to attend. And also those ad hoc committee meetings, if that's 2 or fewer, if you say where you're talking about a particular issue to address. So all of those are fine. If you have a standing meeting within the city and you want to simply observe that meeting, you're able to do that as well. And so my caution on all of these is just to make sure you avoid accidental meetings within these non-meetings, and also avoid the appearance of impropriety at these meetings. So while it may be fine for all of the council members to kind of meet together at the back of the room before a ceremony and talk to each other, and you may be just talking about your families or what you're doing for the weekend, that can have an appearance sometimes of people looking and wondering what's being talked about. So to the greatest extent you can avoid those sort of interactions, that's helpful, and that also helps you avoid accidental meetings as well. So your regular meeting is going to be at the day, time, and location set by your resolution or ordinance. For those meetings, you have to give 72 hours notice of your agenda, and your agenda has to include a general brief description of the items and the business to be discussed. And so that last point sometimes has a question of, well, what does that have to look like? And my rule of thumb is always, you want it to be something where a member of the public should be able to know whether they're going to want to attend your meeting. And so one example of when this wasn't met is a case out of Apple Valley. And in that case, the Apple Valley Council had provided an agenda item that just said Walmart initiative measure. And that was the extent of what their agenda said. But what was actually being looked at was a initiative to adopt a commercial specific plan and potentially have a special election regarding that, and an MOU with Walmart for the acceptance of a gift where they were going to pay for the special election. So you can see in that circumstance, there's a lot more information there that might have created interest in the community than if someone simply saw on an agenda, Walmart MOU. So that would be an example of something that would not be an acceptable agenda item. So next we have special meetings, and these are going to be called by the presiding officer or majority of the council. And here you have to give notice at least 24 hours in advance, and also follow the same agenda requirements of stating the time, place, and what is going to be the topic of the meeting. And notice has to be received by each of the members and the press, and you're only able to consider the specific items on the agenda. There also is the possibility of holding an emergency meeting, and these are going to be relatively rare. So for an emergency meeting, Emergency situation is going to mean either an emergency, which is defined as a work stoppage, a crippling activity, something that severely impairs public health or safety, as determined by the majority of the legislative body. There can also be something considered a dire emergency, which is defined as mass destruction, a terrorist act, something to that effect, or even providing 1 hour notice of a meeting is impossible because of the acts that the city has to jump in and do. And so, in those instances, as you can see, this is going to be a pretty limited situation where this occurs, but it is a possibility. You can also have a closed session in an emergency meeting if that is agreed to by 2/3 vote of the members of the legislative body present, or if you're not able to have 2/3 of the body there, then by a unanimous vote of the members that are present at that emergency meeting. And then there may be circumstances where you have a meeting and then that has to be adjourned to another place and time. And so both special and regular meetings can be adjourned, and that will be continued to the hour for regular meetings. And one thing to note here is that if an adjourned meeting occurs more than 5 days after the prior meeting, you do have to post a new agenda at least 72 hours before that adjourned meeting. So keep that in mind if you are adjourning to another time. And agenda requirements. So this goes a little bit to what we had already been discussing. They have to be publicly accessible, distributed in advance to those who request copies, posted on the city's website, and you have to list the teleconference location, and the agenda has to be posted at that location too. And one thing you might notice in your slide is that there is a little notation there. And you may be thinking as you read that, well, times have changed in the past year. And so how do we deal with that now? And so, to deal with the coronavirus and the COVID requirements that are in place, Governor Newsom did adopt an executive order that temporarily suspended this requirement during the pandemic. So this order says that notwithstanding any other provision of law, that public meetings can be held via teleconference as long as the agency makes public meetings accessible telephonically or otherwise electronically to all of the members of the public that want to observe and address the body. And then any contrary requirements in the Brown Act are temporarily suspended. So, for example, the requirement that at a teleconference location, the public needed to be able to attend at that location, for now, those are not in place. And then other agenda requirements is no discussion or action of items that are not on the posted agenda. So this is an absolute rule for special meetings. You have to have no discussion outside of what's on the agenda. At regular meetings, there can be very rare exceptions that are highly unlikely. And so an item on the posted agenda can be discussed and acted upon if, and so here are the very unlikely scenarios. It came to the city's attention after the agenda was posted. There's an emergency or immediate need to take action before the next meeting, and there is a 2/3 vote. So this really has to be an item of urgency. It can't be an item where you simply realize that you missed the agenda deadline to get something on the agenda, or that it would be an inconvenience if it wasn't approved. It has to really be an emergency or dire need to take that action before the next meeting. Here are some other exceptions to conversations that can occur in a meeting that are not on the agenda. And so, brief responses to public comments, clarifications, announcements of activities that a council member will be doing, and then a request for a future report or to place an item on a future agenda. So for example, if in public comments, there's a member who brings up a lot of discussion about an area of the city they think needs improvement, one of the council members could require a report on that to come up in the future, or ask that that be placed on a future agenda item agenda to be discussed as an item then, but there could not be a lengthy discussion about that topic if it was not already on the agenda. And then we're almost wrapping up on Brown Act. One of the last things to talk about are public comments at meetings. And this one can sometimes be difficult. The public has the right to speak on any item that's within the subject matter jurisdiction, and any specific item of business on the agenda as well. They are not required to register, so you can ask them to fill out a comment card or their name, but that's not a requirement. What you can do, though, is set up some rules of decorum. A lot of times you will have established a time limit on public comments, and also you can have requirements so that members of the public who are at your meetings do not disrupt or cause any sort of disruption that would cause an issue at the meeting. You do have to allow people to record the meetings, but again, there can be limitations so that they are not distracting from the meeting to the extent that they are not allowing it to proceed or something to that effect. And the last one is that you do have to allow the public to criticize both the agency as a whole and or members of the legislative body if they disagree with what's happening, what's going on, or have any issues. So we do have to listen to any of those sorts of comments or criticisms that come our way. And then one of the other things that's allowed in your meetings under the Brown Act are closed sessions. And a lot of times these topics are going to be personnel, labor negotiations, real property, or pending, threatened, contemplated litigation. One thing to note here is that closed sessions are not allowable and are not open simply for a topic that is politically difficult or might be controversial, or that you just kind of don't want to talk about in public. It really has to fall within one of these closed session specific exemptions. And real quickly on the enforcement and consequences, there's a couple of different types of enforcement. There's civil action, and that can be to invalidate a decision, or it can also be to not allow the agency to continue with a pattern of practice. And this lists how that would take place. There are time limits as to when you are able to both present that sort of action to the city to address and file a lawsuit in return. There are also limited situations where there could be a criminal prosecution for violation of the Brown Act. And in that sense, typically you have to have a not an inadvertent sort of violation, but you have to have somebody who's deliberately trying to keep information from the public in those situations. And here we have our quiz. I think we can quickly run through. So here we have an item that includes discussion of a growing problem of affordable housing in the city. Unfortunately, the discussion leads to more questions than answers. The City Council appoints a committee comprised of 2 of the 5 council members to develop a specific policy proposal to address affordable housing. The committee is asked to report back in 2 months. So can these 2 members meet to discuss the policy proposals without an agendized meeting?
In the interest of time, why don't we skip the formal poll on this one? And you can just run into the, there we go, perfect.
So the answer here is probably yes. So if these 2 members constitute a legitimate ad hoc committee, which means that they're not going to be a long-standing committee, they're not going to have the regularly scheduled meetings, they are, designated for a short, very specific type of project, then they would be able to hold those meetings. The 2 of them could meet and discuss without having it be a formal agendized meeting. Okay.
All right, Lindsay, thank you. This is Nick again, and I'm going to breeze through our last group of laws that deal with fair process. And I think I can do these in about 5 to 8 minutes and get you out on time. So we're going to discuss common law, conflicts, and due process. which is actually probably my favorite part of this whole presentation, campaign contributions, what it takes to qualify for your elective office, and incompatible offices, and briefly on competitive bidding. So the reason I like all of this subject matter is because it's really constitutional law. The Due Process Clause contained in the Fifth Amendment of the Constitution provides that no person shall be deprived of life, liberty, or property without due process of law. And so why are we talking about due process? Because that clause is implicated whenever a local agency conducts a public hearing involving matters such as land use permits, license revocations, or terminating or disciplining certain employees. It invokes those interests in liberty or property. So what does due process mean? Before government deprives a person of a protected interest in liberty or property, that person must be given a reasonable notice of the action and a reasonable opportunity to be heard before an impartial decision maker. So generally, notice must be given before a governmental action takes place. We see statutory requirements for notice before a lot of land use decisions can be made. And with respect to the reasonable opportunity to be heard, all interested parties must have a reasonable opportunity to speak and submit evidence in support of their position. And that hearing must take place before an impartial decision maker. And we'll talk briefly about that because it affects your obligations as maybe a planning commissioner or a city council member. So due process requires that when the decision is made at a hearing, the decision must be made by an impartial decision maker. The decision maker must be free from bias relating to the matter before him or her. Pre-existing views on the general policy issues related to a matter do not create disqualifying bias. We want to see that in our policymakers. But due process does require that the decision maker be an intellectual, it doesn't require them to be an intellectual eunuch, as the Supreme Court said. In other words, someone with no views or opinions at all. But it does require you to avoid disqualifying bias, which is concrete proof of a specific prejudice against a person affected by the decision, bias which is sufficient to impair the decision maker's ability to decide the matter on appropriate grounds, and the bias matters to the decision. Bias may also occur as a result of a personal interest, or if there is evidence that a member of the council has personal animus toward the person appearing before the legislative body. So there's actually a lot of cases that develop examples of what constitutes this common law doctrine against conflicts of interest, which really deals with this prejudicial bias. And courts will apply this common law doctrine when maybe somebody has a conflict that just feels like a conflict, but maybe it's not a technical conflict of interest under the Political Reform Act, and there's no contract involved, so Government Code Section 1090 doesn't apply. In the interest of time, I'm just going to breeze through and tell you that this is a situation where a council member, Mr. Benz here, he only has a month-to-month tenancy in his apartment unit, and so he doesn't have a property interest as defined in the Political Reform Act. Now, when he was on the Planning Commission, he voted against an addition to the Clark family duplex that was going to interfere partially with his views. And he exhibited all sorts of animus towards this family. Now, when the project got before the city council, he had already voted against the project at the Planning Commission. Now he's on the council. And he had done a number of things that greatly offended the family, in addition to the fact that he was going to have this interest in his views that was going to be affected if the Clark family was going to be able to get their addition. So, like I said, there wasn't a technical violation of the Political Reform Act, but his own interests were implicated. And because he had shown animus in his statements and some of his actions against this Clark family, he was declared biased, and the decision was actually to deny the second story on the building was overturned by a court because it was a 3-2 decision, and his bias, Mr. Clark's bias decision, affected the outcome. I'll briefly say that this is a case that involves a planning commission, the Nashaw decision. where a planning commissioner actually took out an ad in the local HOA newsletter to clearly oppose a project that was going to come before her later on down the road as a planning commissioner. So when you make those types of statements where you clearly show opposition or support for a project before it comes before you at the city council or planning commission, that can show bias. But there isn't bias when you're talking just about campaign statements. The Supreme Court has ruled that a city council member's statement on a development project when he was solely campaigning did not disqualify him from voting on the project when it came before the city council. Absent a specific statute or local ordinance, elected officials may participate in decisions which affect their campaign contributors. And the rationale is that courts expect local elected officials to express their views to their constituents on issues of policy and public controversy. The bottom line is, if you think you cannot be fair, don't participate in a decision. And always avoid statements before the close of a public hearing that suggest your mind is made up. Instead, make your decision at the hearing after you've heard all the evidence. So don't make statements like, this is an excellent project before the public hearing is closed. And don't pre-commit to any decision. Couple of common things that come up, especially if you're a planning commissioner or you're a council member that deals with a lot of land use decisions. If you make private site visits and you see the developer or the applicant, don't make any commitments to applicants or the neighbors. Make sure you disclose at the hearing any ex parte or off the record information you've obtained. And fair hearing procedures prohibit the receipt of information or comments via email or text during a meeting. I'm going to briefly switch over to a discussion about campaign contributions. It's against the law, as Lindsay said earlier about bribes, to tie a campaign contribution to a specific vote. That type of quid pro quo is bribery. But if that campaign contribution, as I previously discussed, generally campaign contributions don't create conflicts of interest for elected officials. But if that campaign contribution is so large that it's way out of the realm of ordinary and creates a situation where an elected official feels or could feel beholden to that contributor or the public, there's a possibility that the campaign contribution could create a conflict of interest. There's also a special campaign contribution for anyone appointed to a city commission. This doesn't apply to the council. A commissioner who is running for a local office must adhere to this rule, that $250 rule. Under this rule, commissioners must disclose if they receive $250 within 12 months of a decision affecting the contributor, and the commissioner must then recuse themselves from participating in the decision. There's also a prohibition on acceptance of contributions of more than $250 3 months after that decision. You can't solicit campaign contributions for other officers and employees of your agency, and this prohibition applies to direct or indirect solicitations of contributions, except as part of a larger mailer that is sent to the community at large. Violations of this rule can constitute a misdemeanor. So what are the conditions for holding office? Well, first and most importantly, you actually must live in the city of Santa Rosa. And I don't know if you're in districts, but you also must be a member of that district. An elected official must be an elector of the local agency. An elector must be a U.S. citizen and resident of an election precinct and registered to vote in the city or district. And they maintain their principal residence. We call that the domicile in the city. In other words, you intend to come back to that residence whenever you leave. If you move out of the city of Santa Rosa during your term of office, in other words, you move your domicile to somewhere outside the city's limits, you cease to be an elector. And if you're no longer an elector, your office becomes vacant by operation of law. There is a doctrine of incompatible offices, which means that you can't hold 2 incompatible offices. And it applies to public offices, not just merely employment. And if you do happen to accept a second office that's incompatible with your first, perhaps while you're on the council, the loss of the first office, you forfeit your first office and accept the second one. Here's a few examples. You can't both be a city council member and a school board member, or a district board member and a fire chief, or a public utility district member, and a board of supervisors member. It's important to get familiar with if the city has an anti-nepotism policy. Local agencies will have or should have anti-nepotism policies, such as limiting a limitation on appointments or promotions into a department in which a relative already holds a position if that appointment or position will result in creating a supervisor-subordinate relationship, performing of shared duties on the same or related work assignments, or having the same immediate supervisors. Some local agencies also have rules against employing a public official's immediate family during that person's term. There is a prohibition on in the government code that prohibits conflicts and decisions affecting a prospective employer. Under this prohibition, you may not make, participate in, or use your official position to influence any governmental decision relating to an entity with whom you are negotiating prospective employment. This preclusion commences when either you have an interview with an entity for an employment position, or even before you're interviewed, you get an offer of employment from an entity. Importantly, this preclusion does not apply if you are seeking employment with a local, state, or federal government agency. Okay, this is the home stretch, I promise, competitive bidding. In many cases, it's required by state law. And the principles underpinning our public bidding rules are that everyone has a right to compete for city business. Competition procedures get the best price for the taxpayer, and it helps to prevent favoritism, extravagance, or fraud. On public works contracts in particular, with limited exceptions, public agencies have a duty to competitively bid certain contracts. The contract must be awarded to the lowest responsive bidder. There's some exceptions for emergency work and very small contracts. Professional services aren't necessarily subject to competitive bidding. And then there are some limited exceptions for sole sourcing. So it's 5:08. I'm sorry I went a couple minutes over. We've gone through 24 pieces of law and principles pertaining to government ethics. Here's some questions that you want to read and ask yourself before you make a decision. How you want to be remembered? What would a reasonable person do? And how comfortable are you with your action? And if it were to be reported on to the press. Thank you again for participating. We appreciate it. Thank you to ILG for having us. Again, my name is Nick Corelli, and my colleague, Lindsay Thorson, joined me. That concludes our AB 1234 presentation.
Great. Thank you, Nick and Lindsay. If you guys have some flexibility, we've got a couple of quick questions, but to everybody on the line, if you have other scheduling constraints, apologize again, we ran a few minutes over. Feel free to drop off. But if your schedule allows and you want to stay on and hear a couple of questions, we welcome you to stay. Just one quick reminder before, as you guys are dropping off, your certificates will be emailed directly to you within the next few weeks. So please make sure you sign those and then send them back to your city clerk so that you have a record of it and the city has a record of your attendance so that everybody is good on that front. So Nick and Lindsay, if you've got a couple of minutes, we've got a few questions to run through, if that's okay.
Definitely.
Sure.
Perfect. So the first question we received was, are Form 700 filings public records?
Yes.
Okay. Very straightforward. I like those easy questions and answers. Perfect. The next question was in relation to gift limits in the Form 700. So if you're are you subject to the gift limits if you are not a Form 700 filer?
If you are not somebody, then you would not be if you're not having to disclose, because everybody who's going to potentially run into issues of public gifts within your city, you would be required to fill out those forms to some extent. So if you're not someone who's filling out one of those forms, that would be the place where you would report that. So you do not have to report it if you're not filling out that form. See, my answer was not as succinct as Nick's. I could have just said no.
Appreciate that. there was a question that came in relation to if parents are considered immediate family for disclosure or conflict of interest issues. Obviously, know that there could be perception issues related to that, but are there any legal parameters they should be aware of in terms of parents for conflict of interest purposes?
In general, your parents' financial interests are not going to be attributable to you in the same way that your spouse's financial interests and income and job would, or your dependent children would. However, the situation often comes up where maybe you're on the city council and you have a family business, and that family business, might involve your parents. And so in that case, you might have a situation where what your parents are doing in operating the business would have some impact on your financial interests. But just sort of on a day-to-day, your parents' financial interests or income or are not going to be attributable to you.
I think that raises a really good kind of point with a lot of these topics that we're talking about today, is that all of these are really fact specific. And so if you have a situation, even if you might technically, if parents aren't listed on the conflict of interest sort of immediate family, if like Nick said, you have a family business or something similar to that, you all live in the same household, there's other issues that are going on, I think it's always good just to run that by your internal people, your legal counsel, just to make sure there's not something or even an appearance just because of the fact specific issues that can come up.
Perfect, thank you. Dina has asked me to make one more note to everybody in the audience that's still on, that it does require a wet signature on the certificate as opposed to an electronic one. And Dina will also make that note in the follow-up email that goes out to make sure that everybody's clear on that. But just wanted to make that announcement for those of you still on the line. And I'm seeing two more quick questions here, it looks like. There's a few others, and I apologize if we didn't get to all of your questions, but I'm trying to limit them to the ones that are pretty, hopefully pretty easy to respond to. There's another question in terms of dependents, so dependent children. Is there a threshold for earnings of dependent children that would have to be reported or disclosed? So if they make under a certain amount of money, is there any guidance there?
So you have to disclose sources of income to you of $500 or more within the past 12 months. I assume that this is talking about your Form 700. And so it's not really a question of whether there's a threshold, it's whether the disclosure categories, whether your child's income would fall under one of the disclosure categories. I probably didn't answer that very well. I mean, the short answer is no, there's a threshold when it comes to filling out the Form 700 if the child's income, needs to be reported. Okay,
perfect. And we'll close with this one question because I think it's timely in terms of the virtual environment that we're in. So when you're talking about Zoom meetings or webinars such as this one, where the attendees are shut down and can't essentially have conversation amongst each other, is there any advice or limitations on how many people from an advisory body can be on the line, or a council or things like that? So there's no conversation happening amongst them. Is there anything that they should be aware of on that front?
So essentially, you're going to look back to the same exceptions. If you go back to our slide that listed the different types of meetings you can attend, as long as you're not interacting with each other and having conversations. So whether it's a Zoom meeting or whether you're all in an auditorium together, those same sorts of scenarios are going to apply. So you're not really going to have a situation. I'm trying to think of where there might be a Zoom situation and you would potentially have a conflict that you want in person. If anything, in some ways it might be easier if you're all attending a Zoom, for example, if you all wanted to call into a school board meeting, it might actually be a little easier because you're all separated, not being able to comment, looking at the Zoom conference rather than all being, you know, in the school auditorium or something. So you just want to make sure you're not, I think there might be more of a tendency to want to text with each other or write comments on the side if you're in a type of meeting like that, and just to be aware to avoid those sorts of interactions.
Perfect. All right, well, thank you so much. Thank you, Nick. Thank you, Lindsay, and thank you to all of our attendees this evening. As I mentioned earlier, we will go ahead and distribute the slide deck as well as the recording for anybody on the line in case you want to reference back to it. And please keep an eye out for your certificates in the next few weeks, and make sure you're doing your due diligence by signing those and getting them to the clerk. So with that, unless Nick or Lindsay, you have any final thoughts, I think we can let people enjoy their evening.
Yes, thank you, everyone.
Thank you.
All right. Thank you, everybody. Have a great night.
You too.